Hello, what's going on? Let's have our weekly forecast. I have many setups for this week, and I'm sure there might be some other ones coming out throughout the week. So make sure you follow me on Twitter at Salvitrader, which is where I'm sharing my signals. The first one is Aussie Yen, and let me explain to you what I'm seeing here. First, let's start with monthly and see what's going on there. First, see that we have this downtrend. Alright, this monthly downtrend, and the trend line is still intact, so that's good. Also, demand has been removed. See that here we had like support level, and that was removed by this spike that was originated here. Alright, so that's basically telling me if you have a trend line going down that is still intact, and you have demand levels being removed, so that tells you that supply is in control. Let's move to the weekly. The weekly, we can see we have a CP there, and you know the rule says that you can use the CPs as long as the trend line is intact. So that's what we will do here, and that is what I've been doing with the other Aussies, like Aussie, for example, Aussie USD. This is a signal that I shared last week on May 21st. Also, I sold Aussie Kiwi. Was the first. It was the same thing. This was on May 18th. So that's the same scenario I'm seeing here for Aussie Yen. When I move to the weekly, see that this resistance level was removed. Basically, they are grabbing liquidity up there, but we are still in the zone. So that's even better. Now, if I move to the 4-hour time frame, which is my entry time frame, and 1-hour time frame as well, see that. No, well, let's move to the 1-hour time frame because I have a better chart there. Okay, first, see that this trend line got removed. All right, this trend line got removed. Why? Because the last two valleys were removed by this movement. Okay, so that tells me that now sellers are stepping into the market. They started to add more sell positions, and they are trying to get short. Now, this is a demand level on the 1-hour time frame. This was the very last demand level, or the most recent demand valid level in the 1-hour time frame, and that was also removed. So that's pretty much a little bit of the confirmations I use. If you use different confirmations such as EMAs, SMAs, Fibonacci levels, whatever you use, this is the time for you to use it, because I don't trade, and that's something I highly recommend. Not if there is no confirmation, so there is no trade, and you should follow that rule, in my opinion. So basically, now the price is telling me, the chart is telling me that, you know, sellers are taking control on the market. Now, what I'll do is I will wait for the retracement, and once price gets here, I'll try to get short. You can go 2-to-1, 3-to-1 risk reward ratio. That's up to you. Something I like is the fact that we will have to use a very tiny stop loss, just 21 pips, and see that here with just 64 pips you are already 3-to-1 risk reward ratio, which is what I'm always aiming for. I don't trade. I don't gain pips. I rather focus my trading on percentages. So 3-to-1 to me is more than good. I'm more than fine. Sometimes I'm already set. I'm already done for the week when I had already made my 3-to-1 risk reward ratio. So that's the analysis for Aussie Yen. See how the top-down analysis was made from monthly to the 1-hour time frame. And something that I really like is the fact that here we had a resistance level, and that resistance level was removed, and basically resistance traders were selling here. Okay, they were selling there, so they are grabbing liquidity. That's something that I always do, try to combine liquidity and supply and demand levels, because you can get momentum trades like this, candlesticks like this in your favor. So that's the analysis for Aussie yen. Let's move to the next one. Now let's check dollar yen. This is a very interesting pair. This is a follow-up as well. If you have been following my forecast, you might remember that like 2 or 3 weeks ago we talked about dollar yen, expecting a buy order, buy position, and we were also expecting our confirmation, which by that time was an engulfing candle, this level being taken out, and also the trend line being removed. And that's actually exactly what happened, and that's exactly what we were expecting. Now on the daily, we have this CP pattern. First we have our rally, base rally. Is not the base, it's not the best, I'm sorry, CP level, because the movement is not that big, is not a violent move, but it's still a CP. Now what I'm expecting first is level, the price to retrace to the level, and then we can try to get long from this CP level on the daily. But this is the importance of having confirmation. Also we have a very accurate resistance level there, and let me remind you what happened when we have scenarios like this, where we have very accurate resistance level like this one, like this equal highs. They will always be taken out, and this is a profit. This is a very nice trade that I took. I'm still happy about it. So basically I'm expecting the same thing here. All right, this level being taken out probably from this daily CP. Now you might be asking yourself, but this guy is telling me to sell Aussie yen and buy dollar yen. That doesn't make any sense, because I'm not supposed to buy and sell the same currency pair. And yes, I agree with that. You might be right. And let me explain to you something real quick. We are expecting on Aussie yen, we are expecting to get short there, right? We're expecting the price to start dropping, and falling down. And here the opportunity says that we can get long. Now we already had our confirmation. We already have our confirmation in Aussie yen, and here we still don't have confirmation. So if we take our Aussie yen trade, let's say that we are in profit and we are profiting that trade. Probably Aussie yen will let us know if dollar yen is going to work or not. Why? Because if Aussie yen starts dropping, that means that JPY will strengthen, and probably that will also remove this level. If this level is removed, well, just disregard this analysis. Just forget about this analysis. In the end, we didn't have any confirmation, which is what we are always looking for. If you don't have confirmations here, so just don't trade it. Just don't take it. Forget about it. So that's basically the analysis for this pair. I think that this level probably might get removed, or probably the price will start consolidating here. I don't know, but as long as the level is not removed, we can still look for buy opportunities. As long as we have a confirmation, such as engulfing candles, or levels being removed, levels being taken out, so well, you might go ahead and place your buy. But if the first scenario I just mentioned is the one about to happen, so just disregard this analysis, all right, and you will be profiting from Aussie yen. Actually, this is an analysis. This is another signal I shared with you on Twitter, on my Twitter, on Aussie. I'm sorry, on dollar yen, because we had our confirmation on May the 13th. The trend line was removed. This level was taken out. So I waited for the retracement and expecting the price to get to my proximal line. Unfortunately, didn't get there, and I missed my entry. Unfortunately, see, I missed the entry by a few pips. It would have been a good trade, very good trade. But well, anyways, we can still get some opportunities here if we have our confirmation. All right, that's the key. Our confirmation. If you don't have confirmation, so just let it go, and we can get another opportunity probably below here. So this is the analysis for dollar yen. Let's move to another one. Let's check NCD USD, but first, going to the chart, let me remind you something I shared last week, something that I was discussing with you guys. I was saying that there is some market behavior that I've just found out a few months ago, where price, once it's getting close to its major zone, they grab, or well, they drop, or they rally just to grab liquidity. But that doesn't mean that the real turning point has already happened. And I was explaining something on this forecast. I said that this level was crucial. This level was crucial because price could rally from this level to the major zone. Now that's the main reason why I consider that this level is crucial. This level is crucial because we could get the very last final rally to the major zone and then make the drop we were expecting inside this weekly supply zone. So that's actually what happened here. See, the price did rally from the level. The price actually rallied from the level, and now we are getting close again to our main weekly level. Let me also remind you that we are in a bearish structure. We have a trend line there that is intact. We have a CP level, original level there on the weekly. The daily is basically the same stuff, but on the 4-hour level we have a resistance zone. Let me switch to my stop hunt list. NCD USD NCD, there it is. Oh, this is something I was sharing to my Spanish community. First, on the 4-hour level, see that we have an accurate resistance level. So guess who might be selling there? Guess where the stop loss might be, where those stop losses might be. Exactly, something like this. And price drives because of liquidity, and if there is liquidity there and this level has been tested so many times, the more level is touched, the weaker it becomes. So I guess we could get another rally to get into the zone, get into the weekly level. Now, if you didn't take the buy last week, I think you are late already, and you should wait for a sell order once we have a confirmation. Be aware that this is a very wide zone. This is our proximal line, but the level is 242 pips big. It's a very wide level, and when we have wide levels, most of the time price tends to go until the extreme of the zone. Okay, so I shouldn't place a sell order here in the proxima line. I will rather wait for a confirmation inside the zone. And what will be the confirmation? Well, let's wait, because this looks like another valley. So you should you will have to connect your the last two valleys and identify the most recent demand zone inside the level, and just wait for both things being taken out. That will be your job. That's what you have to do. Just wait for the confirmation, or if you have any other type of confirmation, apply your own confirmations. So for this week, I think we could get a rally. We could get a rally up to the zone, and once in the zone, you can start looking for sell opportunities. Once we have the confirmation expected. That's the analysis for NZD USD. For those who took the buy order, because I received messages from traders very happy that they took the buy opportunity, congratulations to y'all, and this could be your take profit zone. Now let's check one more. NZD CAT is the same scenario, the same stuff. We have the same bearish structure basically in all Kiwi pairs, and this is something I really like about this NZD CAT, is the fact that we have a very accurate resistance level, resistance structure level, support, resistance, 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 and we have the same thing. We also have here a trend line from the weekly chart, I guess. Let me see. Yes, that's right, the weekly chart. We have a trend line that is intact. So on the daily, we have also the same thing basically. So our job here is to, wait for the price to remove this resistance level, and once in the zone, apply the same stuff I already taught you to do on NZD USD. That's what you have to do here. Is the same stuff, the same thing. Actually, I will rather wait for a movement like this. Wait for a movement like this, because we might get some trend line traders placing their sell orders here at the trend line, so their stop loss might be probably above that. So just wait for the confirmation and boom. That's what you have to do. Just wait for the confirmation. Wait for strength. If you are in a demand zone, you have to wait for basically a strong and violent move to the upside. Opposite thing on supply levels. It's the same thing over and over again. That's why patience is the key. That's the analysis for NZD CAT. It's a short analysis because it's the same thing as NZD USD, but the fact that here we have liquidity and we can see it more clearly here, and we have some compression there that looks very nice. That tells me that they just started adding sell positions right at the resistance zone. Let's check 3 more. Now let's get a separate section just for these 3 euro pairs: Euro JPY, Euro NZD, and Euro GBP. First, Euro JPY is bouncing off a monthly demand zone. Alright, that's the first thing. On the weekly, we have a compression there, very choppy price action. It doesn't look good, but on the daily, yes, we can see that this bearish structure has been broken. Why? Because this rally removed the most recent supply zone on the daily. Now, when I go to the 4-hour time frame, see what we have. We have a possible support and resistance structure. Where? Here. You know, the textbook says that once your resistance level is broken, it's supposed to become your new support. And I don't follow those concepts. I don't follow those strategies that, well, in my opinion, they don't work as I wish. So I don't trade those type of concepts. You also have here your Fibonacci retracement level. Let me show you. Fibonacci. Where is the Fibonacci? Useless tool. Here. Okay, so we are close to our 61.8 magic number that many traders worship. They worship this number, 61.8 and 70%, and also the 79. I don't trade Fibonacci levels. I trade supply and demand, and I buy from demand zones, and I sell in supply levels. So what I'm trying to explain on this analysis is that we have liquidity. Where is the liquidity? If they are seeing the 61.8 level, oh, sorry, long, yes. If they are seeing their 61.8 level, so that means that their stop loss is below. First thing first, identify liquidity. They might place their buy orders here because we also have in confluence or this new support confluences with the Fibonacci tool, with the Fibonacci level. So we may have tons of stop losses below, tons of traders trying to get long from there because we already have a structure of, you know, higher highs and higher lows. As I said, I don't follow those type of concepts. This is my opinion, my humble opinion. I will wait for the price to retrace to this imbalance. Why? Because this huge movement to the upside, this imbalance, was created by market makers. Banks and institutions bought this level. All right, that's the key. That's something that you always have to identify in your charts, where the imbalances are, because in those levels is where the stock of orders are located, you know. So there might be some buy orders here trying to get filled, and that's what I'm trying to, this is where I'm trying to get long as well. That's why I always try to buy where banks bought, and I always try to get short where banks sold. It's simple. Here, this is a retail buy, and this is an institutional buy. So make your choice. I rather buy here. Okay. So that's something I wanted to explain to you, because we might get some liquidity from retail traders, from retail concepts, where they combine Fibonacci and support and resistance structure. All I know is that the price is showing me, Euro JPY is telling me that the turning point has already happened, because the price is bouncing up from this demand monthly level. So they might start creating more higher highs in the long term. That's the analysis for Euro JPY. Now next one is Euro NCD. It's basically the same thing. We have an imbalance here in the 4-hour time frame. Here I can identify the structure, which is bullish. We have a monthly uptrend. Let's move to the weekly. There is a weekly. This is an institutional level, because it created a new higher high against this strong supply level there. See, we have a spike here. Now on the daily, I can connect the last two values, so we have a trend line very well formed already. And in the 4-hour time frame, is the same thing. If I place my Fibonacci tool, see the exact confluence. They are telling retail concepts, well, they are telling retail strategies by me here at the 61.8 because it confluences with support and resistance structure. All right, but they didn't buy there, they bought here. This is where the origin of the move is, okay, from here. So this is where I'm trying to get long. It's the same scenario as Euro JPY. Now be aware that we all, let me switch to another list. Euro NCD. Okay, be aware that on the daily we also have this level. So we have level inside of level. On the 4-hour level we have this level. I'm sorry, on the 4-hour time frame we have this level there, but price, you know, price can remove this level and go deep into the zone, and then boom. So you can take whether the 4-hour level or the daily level. That's up to you. If you don't know what to do, well, apply confirmations. That's the importance of the confirmations. If you see that price responded in this zone, in this level, well, that tells you that they will use this level. But if you see that the price doesn't react to the zone and the level is removed, well, just wait for another confirmation to happen. In the end, the level is a little bit wide. And the last one is Euro GBP. This is another analysis I have shared with you. I was expecting last week this retracement to happen, but didn't happen. Alright, I already showed you how my buy orders are doing on this pair. One of the rules says that when we have a level that removes support and resistance structure or creates new higher highs or new higher low or new lower lows, those are institutional zones, those are institutional levels. So that's what I'm waiting here. Since this is an institutional level that removed this resistance zone, and now it's trying, and now the price is trying to go up, go higher, and reach new supply levels up there. But if I want to get long, what I have to do is wait for the retracement here. Okay, wait for the retracement. This is a fresh level, fresh daily demand zone. See, on the daily looks very good. Okay, just wait for the retracement, and once price is there, you can try to get long. If you want to wait for confirmation, so well, just apply your confirmations. In the end, this price has a very strong bullish structure. See, this is the monthly trend line is intact. I think yeah, actually, in, let me see the daily. Yeah, actually I can connect this other trend line on the daily there. And you know, the rule says you can use all the CPs as long as trend lines are intact. So yeah, I have another confluence there. I didn't realize before. Okay, alright, that's it for today, guys. I hope you learn, enjoy, and most important, you will profit from this analysis as you have done with the previous one. I appreciate your messages. Don't forget to smash the subscribe button, share this analysis with your friends, and if you want more content like this, if you want to be on top and be updated, don't forget to follow me on Twitter as Salvitrader, which is where I'm sharing my entries, my signals, and I'm sharing content in Spanish and English as well. So that's it for today's that's it for today. Take care of yourself, and see you next week, guys. Bye bye. I wish you many pips for this week. Bye bye.